Hi, welcome. My name is Alan Kennedy of Time, Team and Money Coaching. Uh, I formerly was a chartered accountant and then resigned my membership at the Institute last year to concentrate on helping small businesses grow and thrive even in today's COVID environment. It's amazing fun and I love every minute of it. So today what we're going to talk about is, if I can just share my screen, is reducing stress and increasing profits in a service-based business. Um, um, okay, so let's bring up the PowerPoint and there we go. Generally, running accounting practice, or in fact most service-based businesses, can be pretty highly stressful. I see people working weekends and evenings. I see people under a lot of deadline stress, particularly after last year in the COVID environment. I think of lawyers in litigation or accountants with compliance deadlines, HR people who need to take on staff straight away and don't have time to prepare the contracts, and IT professionals who want where their clients want things fixed yesterday because otherwise their business stops running. And so today's session is about how to reduce stress but still increase profits. So as a general rule, to reduce stress, you need good clients who are not too demanding. And your definition of good clients varies from from business to business. But I'll just share with you my definition of a good client from an accounting practice. Well, number one is probably profitability, because that's one of the reasons why we're in business, is to make decent profits. And if you've got clients who pay you just about the minimum wage after you deduct your overheads, they're not really a very good client. I used to work for a firm who said, working for XYZ, in fact, it was what UK should be fun. If it doesn't make money, it's not fun. And I think that's probably the best mission statement I've ever heard in 38 years of being in business. So other things would be pays the fees on time, refers other clients. That's an important one because then you don't have to spend time and money marketing. In fact, you then don't need my services so much. Has good quality accounting records or whatever that happens to be. Follows our advice. That's quite important because clients who don't follow our advice usually end up blaming us. Brings records in on time. Does not expect to jump the queue. Has high standards of honesty and integrity. All these are self-evident, really. Software is easy to use. We know and like it, so the job is easy. Respects principals and staff. Again, I think that's crucial. Is solvent because insolvent clients not only can't pay their fees, but also they have a habit of blaming their advisors when things go wrong. That's not entirely true, but I think the indemnity premiums for insolvency practitioners are 4 times those of normal general practitioners. And lastly, does not use up partner or principal time because the limiting factor in most accounting practices is the time of the owner manager. So if you have a very demanding client, then it means you make less profits. So going back to the slides, if you want to make money or to increase profits, you generally need large clients. Just a bit of a thanks to my wife, who found that amazing graphic of big business. I think that sums up big business very nicely. So what I'm suggesting you do is to classify your clients. Okay, A, B, and C, 1, 2, and 3. So you put the client who's both big and nice in an A1's category, and then you work down to a client who's small and demanding in a C3 category. I had heard of a client last year who disputed the fee, even though it was roughly half what I would have charged. And then when he left the account because he thought the fee was too high, he then even threatened to send the accountant to the institute for just £45 fee dispute. Just amazingly how some clients can really upset their professional relationship. So anyway, so let's classify the clients A, B, and C, 1, 2, and 3. When I do this exercise, sometimes I get clients say, well, I've got lots of small clients who make me very good money. I charge them decent prices. The problem with that is whether they use up partner or principal time, because there's a limit to how much you can expand a practice like that if they're using up the partner or principal time. If they're not using up the partner or principal time, then by all means have more of them. Right, so as we go through, then what we want you to do is every year weed out the bottom 20% of your clients. Whoopsie days, I don't know what happened there. Well, why should I do that? I hear you say. Well, the answer is because if you replace them with the top A1 clients over a 4 to 5 year period, you can dramatically make a difference to the way your practice or your business runs. So how do you do that? I hear you say. Well, the first way is to move them up the classification. So you can't often do anything about their size unless you're mentoring them or they have growth potential, but you can certainly do something about the fact they're demanding. And I remember sitting down with clients and said, I'm terribly sorry, but I find this relationship particularly challenging because, and then I'd explain why. It might have been my fault. It might have been I hadn't managed expectations, or that I didn't do the work quick enough, but more often than not, it was their fault and it reflected their anxieties and worry. And so often when you talk to them about the difficulties, they would often say, oh, I didn't realize, and would change their behavior. So classically, often clients leave it to the last moment. And unless you tell them that's not acceptable, often by saying, if you do leave it to the last moment, I will charge you extra, then they're carrying on leaving it to the last moment because they presume you can cope with it. So, well, let's suppose that talking to clients doesn't work. The next suggestion I would make is don't just sack the client or increase the fees, because that just gets you a bad reputation. But instead, sit down and have a conversation with them and say, look, this relationship is not working for me. And more often than not, you find it's not working for them either. Disgruntled clients are often unhappy with you for reasons which are particular to them, but not necessarily judgmental about them. And they're just looking for a chance to change accountants. And when you sit down and say to them something like, well, I don't handle small clients very well. I just don't cope with them. But I know accountants who does. Would you like me to introduce you? They'll breathe a sigh of relief and say, yes, please. Now, for some people's A1 clients are other people's C3 clients and vice versa. I remember when I first set up in practice, I got a lot of clients from KPMG these clients were just too small for them. They didn't want to know. They were using up their time and difficult to deal with. And they used to send them to me. And to me, they were A1 clients. They were lovely. I loved them. And they loved me because the fees I charged relative to KPMG were significantly lower. So find them another accountant. It'd be nice if he pays you money, but I would say that's not the guiding issue. The main issue should be, does it help your practice? And does it help them as well? So that's my suggestion to you. I hope you find it useful and helps you over the next 4 or 5 years dramatically improve your practice. My ambition for every accountant is to be able to go skiing in January. So if you can't go skiing now and would like to, then please do give me a call. It's my contact details are on my LinkedIn profile. Thank you very much for your time, and I look forward to hearing from you. I will also leave the contact details below the YouTube video. So that's the end. I'll stop sharing and I'll stop recording